Hey guys, Mike here. So boy, what a crazy market we got going on right now, right? We got the bulls and bears in the market battling it out. One corner over here saying, well, this is why we bought them. The other corner saying, nope, it's just a bear market rally and stuff. And I'm kind of going to show you a little bit of both sides, but also more importantly, two indicators you need to track if you're not tracking them yet to understand for the future and for the rest of your life, actually, called the breadth of where the market's going up or down, right? And I'll give you those so you can look at it, and then why it was so important, which I told you guys, that the Christmas rally, I know it wasn't much of a rally, ended green, okay? There's a reason why I told you they made sure that happened, okay? And I'm going to tell you why. And then I'll also show you that video I promised you guys at the end here about, the guy who knows a lot about China. And I mean, I learned some by actually listening to his video, and it's very short. So if you're into those stocks or thinking about getting into that market, you might want to listen to that as well. But right now, I mean, man, I just want to show you something. Keep in mind, what I'm about to show you, these are 5 trading days of returns just from last week. And this is what got some people going, oh yeah, man, the market's back on. And some people going, nope. And look at these stocks. Coinbase up 50% last week. Whoever Exact Sciences is up 46%. Lucid 28%. You got to look at Zillow. I mean, remember, the market's in the toilet right now. 21% up. An airline, American Airlines now, an airline up 20% in a week. Chewy, talking about how much you spend on pets, 16%, right? And then just look at some of these altcoins coming up right here. Solana, this is in 1 week. 36%, Mana 33%, One 26%. The rest of these I've never even heard of, but they're up 22 to 24%. And if you thought you missed out on BTC, I mean, take a bigger picture right here. Can you even see the rally on this one? This is a daily. This only goes back to March 2022. It's about 10 months. And you can just see, man, I mean, there is a lot of damage on this chart. I mean, look at that. And that's not even the top. That's only goes to 48,000. I put it to 68. It looks even worse. But just to keep things in context, and if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And, if you want to take emotion out of this whole thing, because this is what happens when FOMO comes in, right? There's people say, oh my God, because if you look at the BTC chart, I mean, it literally is going like straight up over the last like 5 or 6 days. And, it's at some heavy resistance now. We'll see if it breaks through and stuff. But, the one thing to look at, and that's why it's good to look at moving averages, look at weeklies, monthlies. And it's like I told in the members video I did Friday, look at the golden cross. If the golden cross happens, that's all you need to know, right? And because we only had one for every bear market going back to the 70s, and that's getting very close to happening. And a lot of stocks are having the golden cross on them as well. Positive, bullish MACD crosses, things like this. And so we'll see if that continues. But what that is feeding into is this right here, and this is the argument for the bottoming and all that, and why we're moving up like we are. And it has to do with, stocks above like the 200-day moving average. So NDTH and TradeView is what it is. You can see, if you look at this, we were down below 10% just sitting there in July and in October, right? So down, really it was like 3% above the 200-day moving average. And now you look at the number, it's like 60% almost are setting above their 200-day moving average. So that is extremely bullish. And that's tech, right, which has been performed the worst. Then you look at the S&P, S5TH, and TradeView, and you can see right here, 10% what we had in October. Now it's 64% above the 200-day moving average. So that is extremely bullish. Doesn't mean it can't change if things start to sell off with earnings and things like that. But you just look, again, been selling off. This has been dropping since the beginning of 2021. And the S&P 500 does have some interesting history here, right? Where it has major losses like you see that happened in 2022, and then what happens in January, right? Right now we're green. But you look at the other big drops right there, January ended up negative. We're going to talk about this in just a minute. And then you can see right there, big drop the year before, ended up negative when it was all said and done. And I know I've looked in detail and done a private video on this. And yeah, usually January, February are atrocious, especially in bear markets. That's just the way it is. But that don't mean this is different, right? And understand, this is what I was talking about when I said it is critical. And I talked about it. I'm sure I got tired of hearing about it. That Christmas rally be green. I don't care if it's 0.5%, 1%, or 10%. Needs to be green, because if it is not, January, February go in the toilet. Then on top of that, you got the first 5 trading days of the year green. So now you go check, check. If January turns out to be green, the numbers are very good for the rest of the year, at least in the overall year, to be green, and not just slightly green either, by the way. And so remember, I've showed you the bigger view. How often do you see 2 red years in a row? It is very, very, and let me put another very on top of it, rare. Okay, and so that's why it was so psychologically important to set this up by having at least that 1.2% green Christmas rally. Then the first 5 trading days go green. So look for January. If it goes green, which it will, if these earnings don't fall off a cliff, which we're going to talk about at the end here, because we do got earnings coming up this week, right? Kicked it off Friday. But another thing to keep an eye on, if you don't ever track this either, which, this is the kind of stuff that worries me, right? And you see when I show you those kind of stocks that are going up, we're sitting at 75% on this fear and greed index, which means we're in greed. And where you want to watch here, especially on this one, is between 75 and 85 normally, because that's going to put us in, once we go above 75, we'll be in extreme greed most likely. And, when that happens, we usually sell off. Now, that don't mean this can't be any different. You can see back here, we sat back there in 2020 and 2021 all up on 75 to 90 for quite a long time. It kept going up, right? And so, again, this could be different, but when you start getting up in these nosebleeding levels, that's usually when big money starts securing profits and stuff. We'll see if this is any different because we've hit it twice this year and we've sold off massively. And that's one of the ones I like to watch. Again, we've hit it twice this year, had massive sell-offs. On this one, though, we were starting to sell off, and then we turned back around, right? So people are coming in with money off the sidelines. Big money has been coming in off the sidelines as well. But, it's just one of those things to watch out for and keep your eye on. And that's one of those things you can set a clock by. If it ever gets below 10%, you need to start buying heavy. If we get between, especially like 85, 90, it's guaranteed we're going to have a sell-off. That's just the way it is because we're in extreme greed. You've seen it many times happen, right? And so where we keep piling in and big money says, I'm out of here, or smart money, whatever you want to call them, right? And so I was going to bring you, before we get to the earnings part, and what's going to be interesting to see what affects them the most, was this gentleman. He's a CEO of the International Beige Book, so he knows a lot about, obviously, international. That's his job, to know a lot about these international countries and stuff they operate in, but especially China. And so he's asked, straight up, like, how do you think the reopening is going to affect GDP? Is it going to help the global economy or just China? And then we'll get into a part where he's basically asked, like, their citizens, actually, let me play this one clip first, and then I'll talk about that next question.
Well, they're 2 potentially very different stories. You've had terrible data, growth data, every other kind of data for 2022. So as COVID-0 has ended and the economy reactivates over the coming months, you're going to see a bounce in everything China. It's a cyclical bounce back. So you're going to see people traveling again, spending again. You'll see investment spending again. You're temporarily, but you'll see consumers jump back at it again. So you're going to see a jump in China. The question is will that have the same effect for the world? And the caution here is that most of China growth has traditionally been output, production, building out of property. These things will not help global growth. It will not help global GDP. So I think the question here is, will the China story be a world story? Traditionally, it has not been.
And so the next question he's asked, unlike here, where we got stimulus checks, they didn't get that there. They were just locked in their homes. And so some of them just couldn't pay their bills. They're living off their savings, burning their savings, right? Which they do over there. They do save a lot of money. But it's totally different, right? And so he's asked, like, what's the state of the consumer, right? What are they going to be able to do now that they're actually free to go spend money and stuff?
Well, the state of the consumer in China is very poor. You had a different type of stimulus in the West. You had, consumers were stimulated, households were stimulated. You didn't have that in China. It was all going to the supply side. So, you've had a problem with consumption falling for several years. And the government's promised that there's going to be this shift from investment to consumption. It's never happened. It doesn't look like it's happening. Now, you will have this cyclical bounce back. So there is the potential that you can have what we probably call a head fake in 2023, where consumers get back into it for 2, 3, maybe even 4 quarters and start spending. They're certainly going to be traveling. And so the question is, as the consumption numbers go up, does this reflect anything more than, a 3, 4 quarter at most bounce? The answer is probably not. You still have the cyclical bounce back framed in the context of a long-term structural slowdown. So you have to be very careful about that head fake in 2023.
And so that's two things to keep in mind, right? I mean, yeah, you having the bounce back because everybody's like, they're just open and they're just piling in, right? There's no fundamentals behind it. It's just go, 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 go. The other one is, how long is that going to, well, the question is, how long is that going to keep up? Two, how long, before this affects inflation in a negative way as far as like pushing prices up? You've seen copper and everything else just start to ramp up, right? Which that will affect how fast we can bring down inflation if that happens. So we're kind of waiting to see, and it's going to take a while to figure that out, right? At least a few months to see how it's going to affect before it even gets in the numbers that we're looking at and stuff. And then the fact is, can they stay open? Because they just reported a whole bunch of data from them reopening as far as deaths and things like that. And so we'll see. It was like, I think they're just going to keep it open though. It seems like for sure. But, coming into earnings, and the last thing here with earnings, you can see this is what we got going on with earnings next week. And we got some big ones coming up, right? I mean, you're going to have Monday, remember, we're closed. But Tuesday, you're going to have Morgan Stanley, Goldman Sachs are going to be reporting. So I think those are the ones to look out for. United, are we going to have another CEO bragging about how much they're overcharging us for these tickets? And are we still paying, which seems to be the case. Alcoa will be an interesting to listen to on Wednesday. Discover, credit cards. Always want to know credit card information. Are people paying their credit cards? Are they putting back more for defaults? That's a big one to look at. Truist is another bank which is becoming bigger in America now. Pay attention to them because they'll talk about us. Netflix, obviously, is one of the big tech companies coming out reporting, the first one really. And so we'll get to see if their subscription model as far as them charging for ads and all that stuff, is it going to happen, right? Because they've already covered one big gap on the chart, and there's a huge gap above that. So will big money continue to push it up, or will they finally let it fall? And the one thing I'm really interested to really hear on the calls more than anything else is the biggest expense they have is labor costs, right? And you can see it right here. This is where they're at. This just came out. This is where they're at now. But you can see, what was the average like going all the way back to like 2009? It's like right here. So you see how far or how high these expenses have got for these companies, right? And I find it hard to believe they're just going to walk out on wherever you're working and say, okay, everybody's pay is cut by 20%. Now the inflation's come down. Could happen, right? We've never had anything like this before. But again, I always say the reason why these earnings are still holding up, and I'll continue to argue that, and think the data backs me up, is the fact is as long as costs are coming down and people are still making the same amount of money, that just gives us more discretionary income. That's the way it is. And so this is going to be interesting to see what they're saying there, because what that also on the other side does, it doesn't allow the companies to cut their prices for their products and services as much as they may want to, right? And so that's another thing when it comes to inflation, because who's the biggest expense? We are, right? So if you can't cut people's costs, or you can't cut your labor costs and stuff, how are you going to cut your product costs down as much as you want to? You're probably not going to be able to. And so that's a whole other deal, which we've never faced since the 1970s. So going to be interesting. Let me know down the bottom what you think about that and stuff. And I'll come out with a video. Remember, market's closed tomorrow, but I'm going to come out with one tomorrow. And we'll look at the charts and things like that and some other stuff I got to show you and stuff to set us up for the week. It's only a 4-day week. And usually short weeks are always kind of all over the place, especially now with earnings and stuff. But, the charts, I will say, the charts do look bullish. So, unless something happens, we'll have to see. So, anyway, hope you guys enjoy the rest of your Sunday and your holiday if you got it off tomorrow. And I will see you tomorrow.